Emergency video. Over the weekend, what happened? Sunday nights, the market's dumped. $2 billion gone. Thin air. Where did it go? Did it go into CZ's pockets? Did it go into altcoins? I don't know. Who knows? Everybody's speculating. Everybody's running around like a chicken with their head cut off. Everybody's freaking out. And the market has been pretty quiet. The crypto market has been very quiet lately. Not really doing much, kind of staying sideways, getting everyone nervous, right? Everyone's thinking there's going to be an impending dump. And everyone's thinking after the rate cuts, maybe that does happen. So I figured I would do a video, quick video here, or maybe not quick, but we're going to see what the overall sentiment is in the market and just kind of get an idea of what people are thinking and what are people trying to get you to do. That's the key, what people are trying to get you to do. And your job is to sit back and figure it out and find that happy medium, that compromise where you can position and not have to be susceptible to FOMO and also susceptible to drawdowns or too large of a drawdown. You want to find that happy medium. So what I'm going to do in this video, we're going to review the sentiment of the market by some crypto influencers on TikTok. I like to use TikTok because it's pretty outlandish and just a little entertaining. And I'll make my comments on that. And then I'm going to show you how to position yourself for a possible impending doom-inducing dump that could leave you poor. We don't want to be poor, right? Fuck that. I want to be rich, bitch. All right, so let's get started here. We're going to start with this first video here that we see. I just searched for crypto, and that's all you need to do. Let's see what people are talking about.
Is this it? Is the crypto market dead? Are we going to zero finally? Everybody's been saying. Let me show you why this is complete market manipulation. This is the market makers liquidating longs right now. Too many people longed the market. Why did they long the market? Because we started lowering interest rates. So people are like, oh, the market's going to explode instantly. No, it doesn't happen that way. We're going to need a few more for the market to really start to heat up. But let me show you something so you understand that this is every single fucking crypto over a $50 million market cap, all simultaneously dumping at the same time. That is not me and you selling. That is the market makers liquidating longs and getting the newbies in the weak hands to sell their crypto so that they can buy it back cheaper and do the same fucking thing on the way up. And then they're going to do it again on the way down. It's going to keep on happening. So you guys just need to be patient.
Okay, a little bit to unpack there. He's saying the market's going to dump. They get you to dump at the lows, and then they rip it back higher, get you to FOMO back in. Yes, trading and investing is a game. And the shorter the time frame your trades are, the more difficult it is. Simply because you have to be more right in a shorter period of time than you are wrong, right? If you just focus on time in the market, stay invested, you could trade, day trade or scalp or whatever with a small stack of your portfolio, that's fine. But have the majority of your portfolio in long-term holds, right? You want to leverage the market as the market goes higher. Now, what I see here is already an altcoin that he's going to shill. Now, I'm going to tell you this. When you're long-term holding, if you're going to be long-term holding altcoins, just keep them small. You don't want to be holding this Ondo or other, he's probably going to shill a bunch of altcoins here to get you excited and to buy. These are just trades. These are short-term trades. You're looking for a mean reversion. Maybe these things dump too far and keep them small. I like to keep my altcoin trades. If it's a major altcoin, if it's a larger altcoin, I like to keep it maybe 5% of my portfolio max, the position size. And then the higher on the risk curve you go, like closer to meme coins and shit coins, that could be sub 1% of your total portfolio value, right? Your crypto portfolio. So just take that into account, right? You want to have most of your allocation to crypto in Bitcoin, Ethereum, some Solana, and that's where you have the majority of your position. That way you follow the market and stay vested. Let's see what he's shilling here.
So sitting at 96 cents now. Look at this dump. You see that? Watch what I'm about to show you. Now we have Cardano. This is right now. This is all happening right now as I'm making this video. It is September 21st and it's 7:42. This is all happening at the same time. Oh, Airdrome, same fucking thing. Look at that big fucking dump. Pudgy Peng.
Yeah, that's the thing with altcoins. If Bitcoin is going down, your altcoins are not going to pump. And if Bitcoin is pumping, not necessarily your altcoins will pump. That's the dilemma there. And that's why it's very tough to stay vested in altcoins, and especially have most of your portfolio into altcoins, because you might not get that pump if Bitcoin pumps, right? So have an allocation to Bitcoin as we watch this guy shill his altcoins. Let's see what else he has to say.
Same thing. Boom. About WorldCoin. You're telling me WorldCoin's doing the same thing? And I could keep going. This is Ethereum, Solana, AVAX, ICP, Bitcoin. Doesn't matter. The crypto, they're all dumping simultaneously at the same time. That's how you know it's market manipulation.
It's not market manipulation. It's just everyone sees everything dumping and then it creates a chain reaction. Liquidations in Bitcoin, Ethereum, there were some large liquidations yesterday. So that creates a risk-off environment. People usually act knee-jerk, sell first, ask questions later, right? That's how people react in the markets. And it's not necessarily manipulation, right? If you think about it, the market is manipulated in a way, right? Large players have large amounts of capital. They can push the markets in a way that they want to, but that's part of the game. And it's always going to be that way. It always has been and it always will be. So don't fool yourself. Don't think that it's going to be all roses and rainbows and everything is fair and there's a fair playing field now, especially in markets. The more money you have, the bigger advantage.
If you're going to do anything right now, there's two things that you do. You buy the dip and you wait for them to spike up.
Okay. That is sound advice for something like Bitcoin, Ethereum, Solana, those major altcoins. But as you go to WorldCoin or Ondo or Pudgy Penguins and all this, the higher risk, they may not bounce. There's going to come a time where they won't bounce. So you can't take this and apply it in a blanket kind of way. But in this current environment, yes, you'll probably get a bounce, right? After people realize, oh, this is liquidations and nothing else is happening, people will start buying back up. But that doesn't mean it can't go lower. It can definitely go lower. So just be very careful when you're playing these. Don't think that it's going to bounce every time, especially with altcoins. Keep it small. If you're going to bet small. And just be safe, man. Don't be fucking full porting on this shit.
Very clear. This is probably going to pump back up soon. It's going to look like a V-shaped recovery. Then it's going to dump again and probably go a little bit lower, or it'll come close to where we're at right now. Then it will go back up. It's going to be a W. You're going to look at the chart and go, holy shit, how did you know, Tyler? Because they do this over and over.
It could do that. He doesn't know for sure. It could be a W, it could be a V, it could be an L, hockey shape. It could be anything, right? So just don't play it and expect some pattern to play out, right? Just manage your risk. Look at the macro view of the crypto market. Look what Bitcoin is doing. If it starts recovering and starts looking like the dump is done and you can base your risk off of Bitcoin making a recovery, then yeah, you could probably jump in some altcoins. But we got a problem here. And I was looking at the Bitcoin dominance. If you look at the Bitcoin dominance, it's starting to bottom here. And what that means is if the Bitcoin dominance chart goes up and higher, it's going to wreck the altcoins. It's going to suck out the liquidity from the altcoins, bring it back to Bitcoin. And I would say now is not a time to really be trading altcoins simply because the Bitcoin dominance chart has been pummeled since June. It's been several months that this thing has been pummeled down to the lows. It even broke down below. But look what happened earlier. Last year, did the same thing, got pummeled. We all thought alt season was coming. We all were ready. And look what happened. Bitcoin sucked out all the liquidity from the altcoins and it ripped to new highs. You don't want to be all in altcoins. You absolutely want to have exposure to Bitcoin right here, right now, because you don't know what's going to happen. If Bitcoin's price goes lower, everything's going to go lower. And if Bitcoin's price is going lower right now, look at it. It's going lower. And the Bitcoin dominance is going higher. It's a double whammy. You might be thinking, why do I want to be in Bitcoin? It's probably a safer bet to be in Bitcoin. If you're going to be in something, be in Bitcoin right now. If not, just stable up, right? If you're just trading, right? I'm just talking about trading. But right now, your better bet is to be in Bitcoin simply because an altcoin will have a larger drawdown compared to Bitcoin. If this Bitcoin dominance starts ripping and if Bitcoin starts going higher in price, at least you have some Bitcoin exposure. And then I would say look up to 60, 65% on the Bitcoin dominance chart to find an opportunity to get into altcoins. You don't want to be getting into altcoins down here, especially as the Bitcoin dominance has been pummeled to these lows, right? Now it's starting to just create this little bottom here and it might suck out some liquidity. So don't get trapped. Don't get trapped by following these influencers and start going all in altcoins because you think it's going to bounce. It could. Now that's not to say it won't, but this is just a very high risk setup here. Very high risk to go into altcoins and play altcoins when the dominance is starting to show, hey, just watch here. If we go up here to 60 and then start rejecting, then yes, there's an argument there to be into altcoins. So I want to put that out there.
When you're in this industry for 10 fucking years and you've made millions and lost millions and made millions and lost millions and made millions and you've seen your portfolio go up and down numerous times, you start to see the patterns. And I buy these massively. When I talk about dollar cost averaging, yes, I have automatic.
All right, he's just talking about that. We're going to go to the next one. Let's go.
Last night, but the crazy part about this is this was all in 1 hour. Ethereum went down 3% in 1 hour. XRP went down 3% in 1 hour. XRP fell under USDT in market cap, down number 4 in market cap. In that hour, it was like 3 in the morning. Doge, Link, Sui, Ton, Pepe all fell under 5% in that hour. The market is seeing a little bit of a bounce here. XRP is currently back up to 286 after it fell to 267 last night. Pretty good to see that people are buying the dips. Come on, there's a 200 EMA right there on the daily chart that's representing at 250.
The thing about these influencers, all they talk about are altcoins. Look at XRP, look at Ondo, look at WorldCoin. These guys need to start being more responsible. I know Bitcoin is fucking boring, right? Compared to altcoins. Yes, you can make a shit ton of money with altcoins and meme coins, but what you don't see is a mass graveyard of bodies that try to make it with altcoins. There's so many people out there that have lost a shit ton of money that you don't hear about simply because they are quiet about it. They're not going to tell everybody that they lost money on Cum Rocket or some shit coin, buying the top of it. And it's embarrassing to them, right? It is embarrassing if you lose all your money on a freaking meme coin. But this type of content, man, don't listen to it. You shouldn't be trading meme coins, especially if you don't have a long-term portfolio. If all your money that's used for investing is trading meme coins and altcoins, you got to stop that. If it's you that trade these altcoins, you need to look at yourself and figure out, okay, either A, I need to fix this shit, or B, if I'm just too much of a degenerate and if I cannot step away from the keyboard and punch in those orders, then I need to hand over the reins to someone else that can be more responsible. If you're married, give it to your wife. I know it's dudes like fucking degening this shit, right? So I'm not even gonna say the wives hand it to the husband. It's usually the fucking guys, right? Y'all fucking gambling on the shit. So just fucking stop that shit. Hand it over, especially if you're losing money. We've been in a bull market since January 2023. And if you have not made any money in this bull market, it's time to change something. You're fucking up. You're doing something wrong. It's sad. Like, I do a lot of one-on-one calls with people, and when I see their portfolios, it's like they're just like in freaking altcoins. And I'm like, yo, man. And it just always goes in one year, out the other. Oh, yeah. They're like, but Bitcoin is too high, blah, blah, blah. They were saying it was too high when it was at 10,000. Then they said it was too high at 30,000, then 40,000, then 60,000. And then when it hit 100,000, it's like, man, like, dude, that's a fucking 10x. That's not enough. You're trying to get a 10x on a meme coin. So you got to fix that behavior. And this type of content, I know this is contributing to the problem. It's preventing people from investing properly.
If we were to continue to fall, I would think that 259 would be a solid price to bounce. But as far as 267, we're getting a bounce off that. So that's a pretty good sign. Keep in mind that 259 level is definitely still possible. What should you do about this? Institutional investors are playing chess while retail investors are playing checkers. This was a classic retail flush to get the panic sellers to freak out, to wake up and be like, oh my God, my crypto crashed, and they just sell and give up.
If you replace the XRP with Bitcoin, this would be a great video. It's like, that's the reality of it. But all right. But anyways, he's just talking about this and how they're playing games and stuff. But it's just, don't worry about that. The games are being played. But you know what? It's out there in the open. If you're aware, just be aware of it. But there's nothing you can do to prevent it or stop it. You're not going to do anything. What you want to do is to figure out how you can profit from it, how you can take advantage of it and profit, investing appropriately, investing in a way where you could use time on your side to capitalize. It doesn't have to be difficult at all. For me, I'm not sitting here every day trading. I bought the bottom of Ethereum and I levered up at 1,400 in April. And I wrote it up. I didn't do anything until 4,300. I started selling. Sold more at 4,900. Like, I made 4 or 5 transactions from April till August. Come on. Like, you don't have to do much. A lot of investing is just boring. It should be boring. I know we hear this, but it is true. Like, you don't have to, if you have a need to be excited and you're bored and you're like, you know what, I just need some excitement in my life. Let me just fucking invest in meme coins. Then you got a different problem. But I'm talking about the people that are genuinely trying to make some money in this market, that are consistently losing because they're listening to these type of videos and saying, okay, they're not talking about Bitcoin or Ethereum. They're just talking about these altcoins and they look cheap. So I'm going to invest in it. You think you're getting a deal. But altcoins, I would actually compare them to options, like short dated options. Sometimes these altcoins expire and never come back. It's just a perfect analogy. They're like options. So treat them like options. Invest very small. Don't expect to hit a home run on every one of them. All right, let's go to the next video.
But Ace, everything in the crypto market is down today. Shall we begin? Are you really ready for this conversation? Obviously, you did not watch the video when I was...
Looks like an OG right here. Let's see what he has to say. Blood in the streets, blood in the crypto streets. All right, let's see what he says. I'm hoping he says Bitcoin, man. Just buy Bitcoin. Like, just starts talking about investing properly.
Talking about Jerome Jack-in-the-Box Powell and how the Fed announcement was going to make the markets dip and go back a little. You didn't watch that video? Let me just put on my crypto therapist hat because you guys need some therapy today. Here's the thing. If you are going to panic emotionally every time there's a dip in the market, you're not built for when the real market takes off, because you're going to make decisions based on emotion. And what's going to happen is you're going to dismantle your entire portfolio. This is a game of manipulation. And the big boys, they want you out now, and then they want you to come back in when the prices are a lot higher. Why do you not see this? And on a day like today, it's retail that's panicking, not the institutions. That's what you have to understand. Their job is to push the price down, have you sell at lower prices because you feel the Titanic is sinking so that they can buy on the other end and then run the price back up. And we're going to see this seesaw action as institutions and other big entities get positioned in this space. But this is the crypto forecast. The market is going higher. We dropped below 4 trillion. We are still running all the way up to 50 trillion plus in this space. The real question is this: can you handle the crypto roller coaster? Can you handle the ups? And can you handle the downs? Can you stay in your seat, or are you going to fall out and crash? That's the real question.
He's got a point there. And it's a great message there. It's very difficult to withstand crypto volatility. Crypto is a growth asset, and it's like a baby. It's very volatile, unpredictable. You don't know when it's going to start crying, when it's going to be happy. You can't even communicate with it because it's a baby. It can't talk. So you have to kind of plan and predict what it's going to do. And you don't know what is going to happen. It could hurt itself. It could fall off the bed. And it's like a baby, right? That's a volatile asset that is unpredictable. That's what crypto is. It's very high energy, very new. Sometimes it makes you pull your hair out. Sometimes it makes you feel super euphoric and you're super happy. And if you could withstand the ride, it could be very rewarding. So he puts out a good message, right? And yeah, don't trade on emotion. If you had a plan to hold higher and you told yourself, oh, I'll be okay with a dip. But then yesterday, Sunday, when $2 billion get liquidated, now you're looking at the market and you're like, you know what? Maybe I should sell. Why? Because other people sold. Then your conviction in your plan isn't strong enough. You have to have conviction in your plan. You have to truly believe in the plan. And don't follow anyone else's plan. You got to make it your own. You got to allocate the appropriate amount of risk that you can handle during those drawdowns. Be okay sitting through those drawdowns. Yeah, it's going to sting. It never gets easy. It's not like you're going to be sitting there happy as prices going lower. If you're sitting there happy as prices going lower, then you don't even have much of a position on anyways. You're being a little bitch. You need to put on some more size. But that's a different topic. But I'm just saying, allocate enough risk to where you are in it for the ride. And as long as you have conviction in that asset, conviction in your plan to hold, then it's all good. All right, so I'm going to go over and show you what it looks like blood in the streets, people telling you to buy the dip, but I'm going to show you how you can use concentrated liquidity pools to buy the dip. But not only buy the dip, you won't have to time the market. And not only will you not have to time the market and find that perfect entry, you can earn some yield. You could get paid in the meantime as you're buying the dip, right? So does this sound like a great idea? I think it's a good idea. So let's go over here. First, let's take a look at Bitcoin. I'll tell you what I'm thinking here. This is what I told my members. And I keep it simple. I look at MACD. I have the 10 SMA here. And the weekly chart is looking a little toppy. It's not able to break above here. And the momentum, the MACD, is showing that it may be going to the downside. It's a weekly chart, so it takes time to play out. It's not going to happen like today or tomorrow. It could, but the probabilities of it is not in our favor for that to happen, right? But it's coming, so we got to plan for it. If you're looking to buy the dip, if you want to take advantage of this opportunity, then this is what you do, right? So we're looking at Bitcoin. We're like, okay, it looks like momentum's going down. Let's look at the daily chart. That MACD looks like it's neutral right now. It looks like it's about to cross over. It's a bearish momentum here too as well. So you got multiple time frames. See how easy it is to look at this? Now the monthly looks bullish. Bullish momentum going up and to the right, right? Above the 10 SMA, that's bullish. But where's that 10 SMA? That's at 100K. That's 12% plus lower. So we get a lot of room to the downside and we can still be bullish. So that's something to consider. Okay. So yes, we could move down. So what do you want to do? Do you want to buy the dip? Yeah, sure. Okay, what are we going to do? How are we going to set it up? Okay, let's look at something like Ethereum. Ethereum's been strong lately since the April lows, came up, made new highs. I've been raising cash up here and I want to put that cash to work. I want to buy back into Ethereum with the cash I raised up here, but I want to buy it obviously lower than where I sold it, right? I want to find a deal in Ethereum. So how will we set this up? All right, let's look at the chart here. Daily chart, momentum is bearish, right? Actually broke these lows here, which is interesting. So that's something to consider. What about the weekly? Weekly below the 10 SMA, the momentum is still bullish here. Still up and to the right. It could easily recover, but look how far we came. I'd say we could go all the way down to 3K and this could still be bullish. So you have a wide range here. Let's go back to the daily. Where could we go on the daily? We could go down to these lows. That's about 3,400, maybe 3,500, or even down to 3K. We got this little kind of consolidation here. Maybe we touch that too. Very possible. Okay, I would like to buy maybe below 4K all the way down to 3K. What I like to do is go to Metrix Finance and plan it out. You could see it. You can forecast everything. You can see your ranges, how much you're buying at different price levels, and determine, hey, is this too aggressive of a buy, or am I not buying aggressive enough? And then you could fine tune it and balance it out. And you could see how much yield you could possibly earn. So let's go over here. Let's flip that to a USD value and say you want to buy below 4K, right? Just so I could show these numbers here. Let me zoom in a little bit. Below 4,200. Okay. And then we want to buy down to 3K. All right. How does that look? We're going to put 10 grand into it. We're going to buy Ethereum all the way down to 3K. We're going to use 10 grand of liquidity to buy it. First thing I like to do is look at the total value. What would the total value of your liquidity be at $3,000? See, now you're getting a look into my mind as I figure out my liquidity pools. And I'm telling you, it's very simple. I don't do any crazy formulas. I don't use any crazy tools. This is all I use, man. And it really keeps it simple. You want to keep shit simple because there are times when if you're doing complicated shit, formulas and spreadsheets and like tracking all this shit, don't even do that. Try to automate a lot of shit. Like Metrix Finance, it could track your portfolio too. It could track your performance. So you don't have to worry about spreadsheets. It's worth the price just for that. If you want to join, I got a link in the description below. So I'll give you 14 days free. You can try it out, right? Why not? Anyways, so how does it look at $3,000? When Ethereum goes down to 3K, the value, the LP value right there, it shows that it would be $8,492. So I would lose about $1,500 in value. All right, that's about 15%. All right, maybe you look at this, you're like, I don't want to lose 15% if the price of Ethereum gets down to 3K. I want to reduce that drawdown. Okay, we can definitely do that. All you got to do, extend it lower. Let's go down to 2K. Make that range down to $2,000. So you know we're in here, I'm looking at the yields, right? Forget the yields, don't even worry about it. All right, how much is it at 2K? The value of my liquidity pool, at 3K. You want to compare apples to apples, right? At 3K, the value will be $9,245. So a little over $700 in a loss. All right, that's actually not too bad. You look at it, you're like, you know what, that's not too bad. And I get to buy the dip. All right. And then maybe if you get down to 3K, you can make some adjustments, which I'm going to go over. All right. So now you want to figure out, okay, how much Ethereum will I have acquired when we get down to 3K? So you click this buy token tab right here. Then you go down to 3K right there, just about. You'll have 1.38 of Ethereum, and you'll still have a little over $5,000 of USDC. So you'll be about 50-50 in your liquidity pool. You can look at that and figure out, okay, I like the risk profile where I will only lose $700 if we get down to 3,000 from the current price of 4,200, but I don't like that I won't own a lot of Ethereum up there. And if you think Ethereum's maybe the lows around 3K, what can you do in that situation? I got the plan for that too. All right, so let's go back here. You'll have $5,063 and you'll have some Ethereum, 1.38. So what are you going to do here? If price goes down here and you're like, okay, great. We're at 3,000 Ethereum, but I want maybe 2 whole Ethereum. I want another Ethereum right there. So I want, say, 2.5 Ethereum at 3,000, okay? So maybe when we get down there at 3K, you unstake that liquidity pool. You secure that 1.38 Ethereum, and then you take that. Here, let's just set it up here, because remember, the value was 92.45, if I remember correctly, when the price of Ethereum gets down to 3K. So you lose about a little over $700, right? So we put that value here. I'm like, okay, we secure that bag at 3K. Now you want to set this to 3,000, the price here, right? So now you're figuring out what your future range would look like. You're doing all this before you even stake the liquidity pool. See, that's the beauty of it. You plan all this out. That way, when those prices hit, when 3K comes, you know exactly what to do. So you put 92.45, and then you're like, okay, now I have secured that Ethereum, that 1.38, and then maybe I want to buy a little bit more. Before we stake the whole liquidity, remember you have a little over $5,000, right? So say you take $3,000 of it, and you stake, price is at 3,000. So you go like $2,999 or $2,900, right? You're like, maybe I could get better pricing for the rest of my USDC. We set this at 3K at current price. You can see here, all of it's going to be USDC, obviously, because you want to convert $3,000 of USDC into Ethereum. And then right here, by token, if price goes down to 2,900, you will gain an extra 1 Ethereum, which will put you at 2.4 total Ethereum. And say you're like, great, you converted that. And then not only that, your range is super tight. And even if it takes like just 1 day to fill that order, you're going to earn so much yield in that. So you're getting paid for all this. You're getting paid to trade. That's the beauty of it. After that, now say you have 2 point whatever of Ethereum, the total value of your liquidity is now 92.45 because you're down about a little over $700 at 3,000 Ethereum. Now you want to set up your range, your future range after you acquired the Ethereum that you're looking to acquire. You want to set up a range. You're like, okay, you have $2,000 left of USDC because you used 3,000 of it to buy more Ethereum. So now all that's converted to Ethereum. but you still have $2,000 of USDC. So you can buy lower if you want. Say you can set up this range like 2,500, and then you can set the upper range because now you want to sell that Ethereum higher than where you bought it. You accumulated that Ethereum, now you can sell it higher. You're in the driver's seat now, you're in control. You don't want to tighten this range like 3,500 because you started buying at 4,200. You don't want to be out of the Ethereum at 3,500. That would create impermanent loss. And if you are not okay with that type of loss, which you shouldn't be, because it just makes sense. You're buying at 4,200 down to 3,000, and then you sell everything at 3,500. Then what the hell are you doing? Just because you want a higher APR? No, that's not how you think. You got to think, okay, I want to sell this shit higher. I want to get rid of this shit higher. I want to sell it. If you want to sell it all at 5K, you're like, I want to sell it all at 5K, all this Ethereum I accumulated. I would say set this up at 6K or even 6,500 is upper range. Having that higher number in the range allows you to hold more Ethereum on the way up. You're not selling too aggressively too early. You're keeping most of that Ethereum. You're keeping it past 4,200. And then most of the distribution is going to be happening at higher prices the closer you get to 6,500. How does that look at 6,500? At 6,500, the value of your liquidity pool will be $12,680. Okay. How much will it be at 5,000? It's going to be $12,180 at 5,000 or $12,680 at 6,500. So if you hold from 5K all the way up to 6,500, you're only going to earn an extra like $500-$600. Not even worth it. But you see why I set up that wider range on the upside when you want to be out of your position around 5K. The capital gains that you will earn, you see how it starts tapering off? That's your capital gains in the liquidity pool. It starts tapering off above 5K because if we draw back down, you lose all those gains. So at 5K, 12,200, you unstake it, maybe sell more of that Ethereum using a liquidity pool, right? A very tight range liquidity pool to convert that Ethereum to USDC. And there you go. Good to go. That's it. It really is that simple. That's how you plan it out. And if you have no exposure to crypto right now, you could buy some Ethereum here, right? Maybe a little bit here. We're at almost 4,200. Buy some here. Maybe buy 20% of your position here and set up a liquidity pool, right? Say you have 10K. Let's go through it real quick. 10K. You have 20% of your position in there. So you want to bring this, say 1,900. Maybe this is at 5K. You can see the ratio here, the liquidity pool ratio, 20% to 80%. So what this is, I like to call it the FOMO eliminator strategy. You're like, I don't have any crypto and I want to buy in now. I want to buy 10K worth of Ethereum right here, but I'll be upset if price drops down to 3K. If I bought all my Ethereum here at 4,200, what can I do? Buy a little bit, buy 20% of your position in it. That way, if it goes up to set up a range 2K to 5K, and if price goes up, you make some money, right? At 4,200. If price goes up from here and you bought 20% of your position in Ethereum and it decides to rip higher, you make a little bit. So at 5K or even 4,500, you make a couple $100. At least you participated in some of the move. If it's not enough, you could always adjust this number, right? Adjust the ratio, make a range that allows you to have more Ethereum. Say you want 30%. Then you look at this range, you're like, okay, if we go to 4,500, if I go out of range, I'll be at 10,300. You also got to look at the downside. If I have 30% of my position in Ethereum, what happens if we get down here to 2,700? Well, I'll be okay with the value of my liquidity pool at 7,500. Or I lose $2,500. It's 25% of your position in value goes down. That's where you got to think. That's where you compromise. That's why it's called trading. Compromise. Figure it out. All right. So hopefully that's helpful. I know it's a little bit of a long video, but I figured it'd be helpful for those that are panicking, wondering what they should do. Maybe they see this as an opportunity, but they're afraid to jump in. But just jump in now, set up a range, right? Something that fits your narrative of what you want to see out of the market. Okay, I want to buy the dip, but I also want to participate in the upside. So set up a liquidity pool in that range. Don't worry about this APR. It's not going to do anything for you. That takes a year. Plus, if this thing dumps to 3K, there's going to be high volume, high fear, high capitulation, lots of volume. And this number will probably be like 10 or 100x. It'd be 300% or 3,000%. And I've seen it. I participated in it. So I don't even care about this number, what it says right now, because it doesn't mean shit. You shouldn't have to put any weighting on it at any present time or point. Like you don't know what the yield's going to be tomorrow. It could be 10x this, 100x this, easily. All right. So just don't worry about it. Don't even focus on it. It's going to come. You're going to get the yields. What you want to do is figure out, okay, I want to position in a way where I don't get wrecked. I don't want to get wrecked, but I also want to participate in upside. Great. Now you have a liquidity pool. That's it. That is the simplest form to do it. And that's how most people should do it. You don't have to worry about, oh yeah, let me run this formula. Let me see what the volatility level is. Let me see, is volatility high? Is percentage? Let me sell. It'll be a good time to sell volatility. The thing with liquidity pools, you can't apply an options logic to it because it happens in real time. That volatility could spike in real time, 10x, And then you come in, you're like, oh, that's a good opportunity to sell. You come and sell, but if the volume dries up at that moment, you're not going to get any of that volatility, any of that juice, because the volume's there. You get paid on real-time volume. So how do you combat that? How do you take advantage of that? Time in the market. You got to be in the market often and at all times. Just position yourself with your liquidity pools in a way so you don't take too much risk, right? You could set this at 4,200. You can set this down to 1,000. Say even $100 Ethereum price. What does that look like if price gets down to $1,000? The value of the liquidity pool goes down 3,000. At $1,000 Ethereum, you lose only 30%. Where Ethereum dropped in value, like that's like 70%, 80% probably, 70% at least. At 3,000, you only lose $300. Now you can see how you control the risk by going wider. That's more important than a stupid APR. Yeah, 10%. Oh man, it's only 10%. I'm only losing $300 if we go down to 3K. But if you're one of those guys that's, you know what, I need that high fee. Give me that high fee. How does that look? Okay, great. 57% going this tight instead of 10%. Okay, you get an extra 40%. Uh-oh. Or Ethereum goes down to 3K. What's the value? You lost $1,500, whereas the other guy with the wider range only lost 300. Now who's in the lead? Who's doing better? This can happen in a day, and then you still got to wait a year to make that 40% or 60%, right? But even then, the yields are going to be high during this time when the capitulation comes, the fear. So the guy that's down with a wide range down to $100, he's going to still participate in those high fees. There you go. So don't focus on APR. And that's how you take advantage of a market like this, where everyone's starting to get fearful, but you should be looking at it as an opportunity, maybe to buy lower. All right, hopefully it's helpful. Just want to put that out there. I don't know who's going to watch all this, but it's a long video, but take care. Peace out.